You just heard I came to HSBC a little over 2 years ago after spending nearly 20 years with the US government. First as a prosecutor, then as a leader of prosecutors, and then ultimately as the head regulator in the anti-money laundering and countering the financing of terrorism space. Now, during that time, I spent time interviewing individuals who thought murder was an acceptable business strategy. I looked at the inner workings of corruption in the highest echelons of my government and others. I am responsible for having fined banks over $1 billion, having cutting off others from the US financial system, which is sometimes referred to as the regulatory death penalty. Having cracked down really on money laundering through casinos, through virtual currency, through luxury real estate. And so when I moved to HSBC just over 2 years ago, people often now ask me the question, how does it feel to be on the other side? And when I get that question, I can't help but think back to June 3rd of last year. I had already moved from Washington, D.C. to London to work at HSBC headquarters. And on June 3rd of last year, a van full of ISIS-inspired terrorists drove down London Bridge, ramming into pedestrians along the way. Went into Borough Market, which is a kind of thriving neighborhood with bars and restaurants. They jumped out wielding knives and started stabbing pedestrians who were in the market. Amongst those who were killed that day was Ignacio Echeverria, a member of my team at HSBC, who died heroically while trying to save a woman he didn't even know. And so that day, it was a Saturday, as my team went into the office, as had now become rather routine because this was the third attack in as many months. As we rushed into the office to respond, to see what we might have amongst our information to give to law enforcement and the security services, as we did that day, I wasn't thinking what it was like to be on the other side. In the days that followed, we didn't yet know that Ignacio was amongst the missing on that Saturday or that Sunday. But on Monday, as we came into work again, having been working nonstop, the law enforcement had asked us to be on 24-hour shifts. As we came in on Monday morning, what you probably don't realize is that our office is in Borough Market. And so as we walked in, we saw the yellow police tape cordoning off the whole area. And as we walked into the office that day, we learned that Ignacio was missing. And the members of my team who were busy assisting law enforcement were sitting right next to the team that was working with the police and Ignacio's family to try to locate him and find out what had happened. And they, in turn, were sitting right next to Ignacio's team itself, who had just found out that their colleague was missing as a part of the Borough Market attacks. So on that day, I wasn't thinking what it was like to be on the other side. The thing is that while that's the most vivid of the incidents, that's not the only team that's doing this type of work. We have people throughout HSBC in the first, the second, and the third lines, business-facing people, compliance people, folks in internal audit, who every day are helping to keep our customers, the communities in which we operate, and the financial system of which we have a privilege to be a part safe. They do that by stopping fraud, by returning stolen monies, by identifying individuals who appear to be the victims of human trafficking, and reporting that and many other apparent suspicious activity to law enforcement. So when folks ask me, how does it feel to be on the other side? I have to say, I reject the premise of the question. The people at HSBC, the people in the financial industry, are a part of protecting our customers, the societies in which we operate, and the financial system of which we're all a part. So the only question then is how we can be more effective at doing just that.
Over recent years, HSBC has transformed how we manage financial crime risk, but we're not stopping there. We want to help lead the industry by defining a new intelligence-led approach to financial crime risk management. This will allow us to step up efforts to keep human traffickers, drug dealers, and other criminals out of the banking system. Think of the way we hunt for suspicious activity now as a bit like looking for a needle in a haystack. While we're searching, other financial crime could be missed, and at the same time, normal customer activity can be caught up. Being intelligence-led allows us to more precisely target suspicious activity while leaving genuine customers unaffected. We know this is an industry-wide challenge, and while millions of suspicious activity reports are filed annually, 80 to 90% are of no immediate value. It's estimated that not even 1% of the criminal funds flowing through the international financial system each year are believed to be confiscated by law enforcement. So why is this? At the moment, across the industry, we only use a small amount of the data available to monitor and screen customers and transactions. Our current systems use rules to target broad segments. This produces lots of false alerts about unsuspicious activity, while information on individual customers is limited. By using our size and scale to our advantage, we can harness the potential of our data, and by applying tools like artificial intelligence, we can better analyze it. Of course, we'll need to work with a range of partners and show regulators and others the benefits of our new approach. But those benefits are significant. We will be faster and more accurate at detecting suspicious activity, reducing the number of false alerts. At the same time, we'll gain deeper and richer insight into customers. This will help us make better risk decisions. And we'll be able to provide better information to the bank and law enforcement. Ultimately, it helps us get things right for all our customers, while protecting the integrity of the financial system we all rely on. HSBC, together protecting a world of opportunity.
So the vision, how are we actually going to do what it says in that animation? Well, let me tell you about the vision first. And as I do that, I want you to know this isn't theoretical. We actually have a prototype, and so I'll talk a bit about that towards the end. But the vision, what is it we're trying to create? Let me start with what you see on this slide. Imagine a world in which you have a financial crime risk score for each and every one of your existing customers and prospective customers at your fingertips. It's updated automatically with each new bit of data and intelligence received by the bank, put into its proper context and in near real time. It combines and aggregates, giving you a view of sectors, businesses, and regions. I like to think of this as a score or an assessment. What is the probability, we ask ourselves, what is the probability that this individual poses a significant financial crime risk to us today at this moment, based on all of the data that we have at our disposal? And thinking about that across all of the risk types, money laundering, sanctions, tax evasion, fraud, any of the financial crime risk types, one assessment, understanding what is the probability that someone poses that risk. And what could we do? How would it change the job we do today if we had that? Well, first of all, it would enable us to be much more targeted in terms of the threat mitigation that we take within the bank. So deciding who's going to remain as a customer, who won't remain as a customer, and how we'll manage any financial crime risk that might be there. It also helps us to provide more useful information for law enforcement. So when we look and are thinking about how do we help law enforcement to confiscate more of the dirty money that's out there, if we can provide them better information on which to act, we can be a part of that. It also enables us to be targeted and leave our legitimate customers to have a frictionless journey and not to bother them with compliance steps that just aren't needed and aren't relative to the risk that they pose from a financial crime perspective. Because when we think about it, we know that just a very few of the customers that seek to exploit our services for criminal means are actually within our customer base. It's a very, very small fraction. And so we'd like to leave most customers to get on with their lives, to grow their businesses, and to seek out the opportunities that they want and that they're asking from us. So it's a game changer if we can put this into practice. And again, as I mentioned, we do have a prototype. So when we think about this problem, we think about it in 3 areas. We break it down into 3 kind of problems we need to solve. One is about data, one is about analytics, and the third is how we deliver this information to the people who need it. Data, analytics, delivery. In the data aspect of this, we have an advantage at HSBC that perhaps some of our peers do not, and that is our size and scale. We have more than 38 million customers. We're in more than 60 jurisdictions. 90% of the GDP, trade, and capital flows go through us. 90% of the worldwide GDP, trade, and capital flows go through us. And we have 93 petabytes of data. I think it's more than that since I've heard that number. It was a while, probably a year ago, so I'm sure it's much more than that today. So we have plenty of data on which to act in HSBC, but when we think about the data problem, we have to get the data in a format and in a place where we can run the type of analytics we're talking about over it. And so we've built a financial crime data lake. It's where we've pooled data from more than 50 jurisdictions, customer data, transaction data, the different types of things we collect, so that we can run analytics over that pooled set of data. The thing is, when we talk about dynamically updating a risk assessment for each and every one of our 38 customers, that doesn't take a small amount of processing power. That takes quite a bit of processing power. And so to make this work, we need to operate it in the cloud. So we have a strategic partnership with Google for just that purpose. So the first piece of the puzzle for us is data. The next piece of this puzzle are the analytics. What kind of analytics are going to enable us to have this type of an assessment, this type of a risk score? And for that one, we've broken it down into essentially 3 simple questions that we need the analytics to answer for us. When we think about our customers, we need the analytics to answer the question, who am I? Who is the customer? What do we know about this customer in terms of how they compare to peers? Is it a flower shop in central London as opposed to an oil business in Dubai? We need to understand, who am I? Who exactly is this customer? In a fair amount of detail, like the level of detail that you see with marketers today who are using analytics to give us targeted advertisements right to our phones, that type of analytics. The next question we need to answer is, what do I do? What is this customer's behavior? And what is that customer's behavior over time? So here we're looking to see how does a customer normally act, and is there some sort of an anomaly at some point, whether it's an anomaly in an amount of a transaction or some other relevant type of behavior. Over time, what type of anomalies do we see with a customer? And we're asking, how does that customer compare to the other customers in their peer group, the other flower shops in central London? Is their behavior somehow an outlier in a way that's relevant to us? So how do I behave is that second question. And then the last question we ask ourselves is, with whom do I interact? And there we're thinking about the customer's network. That could be a network that's made up based on their transactional activity. It could be a network made up based on social indicators like addresses, phone numbers, device IDs. But if we have a sense of who's in a customer's network and whether the other people in that network have been exited from our business because of financial crime reasons, it gives us a sense of a risk of that customer. And if everyone in that network is good and we've never had any problems from a financial crime perspective, it can make us more confident about that customer. So we're seeking to answer these three basic questions in terms of the analytics. The last piece that we need to think about is delivery. So now we have the data, we've run the analytics over it, we've gotten a score to give us a sense of what is the probability that this customer poses significant financial crime risk to us today. What do we do with that information? That's the delivery piece, and that might actually be the hardest part of building this thing. We've got to deliver that information to the right people in our bank. We have more than 230,000 employees, by the way. We have to get it to the right person in the bank at the right time to take action, and we have to have some level of oversight and governance to make sure that that action happens and it happens in the right way. So that's the third piece, is the delivery piece. And that's the piece that really will require us to rethink our policies and procedures. It's the piece that has us working early and often with regulators all around the world to get them comfortable with the idea of moving to this new system. Because what I'm talking about is not talking about taking what banks and the financial industry do today in terms of managing financial crime risk and making it more efficient. It's a paradigm change. It's looking for criminal activity in a completely different way, which will require us to fundamentally change the policies and processes we have in place. That means we have to have our regulators on board with us. And it's why we have taken the stance of talking to them early and often about what we're thinking, what we're trying, what we're testing. I have to say, the reason that I'm here in Singapore today is because our regulators here, MAS, are one of the jurisdictions that's incredibly supportive of having these conversations and exploring what the next avenue in financial crime risk management can be. So I mentioned that we have a prototype and that it's not just a theoretical exercise. So we have built a prototype. The early returns are really promising enough that we now have internally a round of investment to look to bring these benefits into the bank starting next year. In fact, what we've seen as we've tested the prototype is that it's finding criminal activity or suspected criminal activity that had only been identified in the past by humans, not by our automated systems. So the way banks identify criminal activity is both by automated systems and by members of staff who see something that doesn't look quite right and they report it. These new capabilities can find those things that in the past only members of staff found because it didn't look quite right and they reported it. And that's a game changer because that's something we can operate at scale. That's something we can operate in more than 60 jurisdictions and across 38 million customers. That's something we can do consistently, day in and day out. The machine is not going to wake up tired. It's not going to be hungover. It's not going to have a bad day. It enables us to have some consistency and to do it at scale. It's a true game changer. So in doing this, we're developing the capabilities with in-house talent, but also by partnering with fintechs and established companies like a Google externally. We've done a fair, or I guess a big invitation to vendors to come in and work with us. We explained to them what we're trying to build, and we invited them to submit applications to work with us. We have partnered with some of the very vendors that are out here on the floor today. We've invested in some of the companies as well and are continuing and looking to continue to do that as we build out these capabilities. I guess in close, I think about this as, we're fighting to hold back the tide of criminal innovation. And we've been doing that for years, decades even. Now we're finally in a place where we can start to use some of the innovation that we see here at this tech conference this week to our advantage to be able to finally address, I think, some of this criminal activity in a much different way. So I'll tell you what I told someone that I was recently recruiting out of a government position to come work with us at the bank. And what I told him was, you can make a bigger difference by moving to HSBC and helping us to make it safe, helping us to protect it from criminals exploiting our services. You can make a bigger difference for good and protecting the communities than you can by working in your government role today. And I truly believe that. So when someone asks me, how does it feel to be on the other side? I just look back and think to myself, I'm not. Thank you.